Hey everyone, welcome back to Corporate Decoder. Today, the crypto company just filed an 8K, and I am seeing one number that is very interesting. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company sold shares in a private deal, and while the news headlines focus on the amount, the price tells a different story. Alright, let's dive into this filing from the crypto company. This is a current report, essentially a way for companies to quickly announce important information to the public. They filed this on the 9th of July 2026, reporting events that happened earlier in July. The key date here is the 2nd of July 2026. This is when the main event we are going to talk about actually took place. The company in question is the crypto company, and it looks like they are based in Nevada. Now, onto the meat of the filing. What actually happened? This means the company entered into a pretty important contract. The agreement is a subscription agreement. Think of this as a formal agreement for someone to buy shares in a company. Here is the crucial detail. The crypto company sold 8 million shares of their common stock to an investor called Sinco International Investments, Inc. They are getting $25,000 for all those shares. This was a private sale, meaning it was not done on a public stock exchange, and they are using an exemption from needing to register those shares with regulators, which is common for private deals like this. Let's break down the numbers because they are eye-opening. They sold 8 million shares for just $25,000. If you do the math, that works out to about $0.003 or 0.3 of a cent per S-hair. That is incredibly low. Given the company's market cap is currently only $5 million and the stock price is practically zero. Selling shares at such a low price, even in a private placement, indicates a very challenging financial situation, or a specific strategic reason for offloading such a large block at a depressed valuation. It suggests the market price, even if minimal, is significantly higher than what this investor paid. This type of private placement can sometimes be a precursor to further dilution or a sign that the company is raising capital at any cost. On top of the shares, the investor also gets a prepaid warrant. This is like a coupon that allows them to buy more shares in a future private sale, with terms already set. This gives the investor a potential upside if the company does well later on, but it also means more potential for share dilution in the future for existing shareholders. The agreement also includes standard legal promises and guarantees between the company and the investor. These are mostly to sort out who is responsible for what between them. This section confirms that they sold stock that was not registered with the SEC. This just reiterates that the shares sold in the deal we just discussed were not publicly registered and were done under specific rules that allow for private sales. They are relying on specific regulations that allow private companies to sell shares to investors who meet certain financial criteria, known as accredited investors. These investors are supposed to be buying the shares for long-term investment and not to quickly resell them. This ensures these deals are not really the same as buying stock on a public exchange. This section lists the documents attached to the filing. Exhibit 10.1 is the actual form of the subscription agreement. They mention it was previously filed back in April 2026, so this is basically referencing a reused document. And Exhibit 104 is the standard interactive data file that makes the filing easier to read for computers. Finally, we have the signature section. The report is officially signed over a week after the event, on the 9th of July 2026. It is signed by Ron Levy, who holds multiple key positions: Chief Executive Officer, Interim Chief Financial Officer, and Secretary. This tells us the top leadership of the company is aware of and signing off on this transaction. Looking at the broader context, the crypto company has had some news recently. There was a report about them needing to audit financial results due to a significant error, and they appear to be growing their staff with a revenue growth plan for 2026. They also made an acquisition of Frame blockchain assets. However, the stock price remains extremely low, essentially trading at pennies or less, and has been for a while, with a very small market cap. This private placement at such a low price, effectively less than a penny per S-hair, is a significant event. It highlights the company's need for capital, but also raises questions about the valuation and future dilution for existing shareholders if the stock price were ever to recover. What I'm actually looking for is how this capital injection will be used to fundamentally improve the company's financial health and prospects, given the extremely low valuation at which these shares were sold. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.